What is a unit trust and what is an equity fund in simple terms? Hi, my name is Professor Caro Nyakaro, Professor Emeritus of the School of Hard Knocks. I am an award winner of the Association of Kenya Insurance Agents of the Year and a financial advisor extraordinaire, pastor of the pastorless, mother of the motherless, but today we are not going to go that direction. I just want to explain briefly what an equity fund is and what it means when you buy units in an equity fund. So let's first understand what is a unit. Look at a unit as a slice of a cake. When you and I eat an equal share of a cake, it means we are eating an equal share of the ingredients that have been used to make that cake. So if that cake was made of eggs, sugar, flour, butter, it means you and I are eating an equal share of the sugar, flour and butter if we have an equal share of that cake. So in essence, a unit is just an equal share of a fund. We shall define the funds later, but once you understand the unit, it means your unit and my unit, they are worth the same value in terms of what the underlying investments are. So depending on the kind of fund that you are in, or rather depending on where your fund money, the name of the fund that you are in is dependent on the type of investments that your money has been fucking. The fund, okay, where are we? We are at trying to understand now. We are at understanding, we have understood a unit. So when you and I eat an equal share of a cake, we are eating an equal share of the ingredients, the eggs, the flour, the sugar, the butter that were used to make this cake. So when you buy a unit in a fund, you are in essence investing in buying a share of the underlying investment. So when you say I'm investing in an equity fund, equity in this case, I'm talking about the Old Mutual Equity Fund, picks the top 20 of the top performers of the Nairobi Stock Exchange. I don't know if they've gone East African, but it picks, let's just say, the top performers locally in the stock market. And therefore, when you are buying a unit in an equity fund, you are an indirect shareholder of the funds, of the shares that the equity fund has bought on your behalf. So the advantage are obvious. For example, you spread the risk. When you buy one unit from an equity fund, you are an indirect shareholder of 20 different companies that have been picked by shareholders. I mean, not shareholders, but fund managers. So also realize that because you are a member of a fund, when you bring your 100, I bring my 5,000, somebody brings their 500,000, another brings their 5 million, another one brings their 5 billion, another one brings their 500 billion. We pool all that money as Old Mutual Fund managers. We go to the stock market and we are able to trade, buy and sell. So there is a team of fund managers that is doing the active trading on your behalf so that you don't have to make those decisions. By the way, please note that investing in the stock market is not a joke. You need to understand the markets, tell the future, tell the past, look at the trends, know commodities, world markets, I don't know, blah, blah, blah. And then you with your 500,000 or your 5,000, how many shares can you buy of anything for that matter? But the beauty is that when you invest in an equity fund, you join a pool of other investors. And when you buy a unit, your unit and my unit and whoever else's unit is worth the same. The only thing is that, of course, when I buy more units, when I invest more, I have more units than you. But each individual unit is worth the same. So, for example, when you buy a slice of a banana cake, there's banana, sugar, flour, milk, whatever it is. When you buy a unit in an equity fund, there is Safaricom, there is EABL, there is the big banks, there is the top performers. So what are the advantages of going to the unit trust? That means I have to go and also what is the advantage of going through a unit trust fund vis-a-vis going to the market of your own? Sometimes I talk to people and they tell me I've invested in the unit trust on my own. I have invested in the stock market. I went and bought so and so shares. I invest for myself. What are the advantages of using a fund manager? You don't have to make those decisions. You spread the risk. When you invest for yourself, you expose 100% of the money you have exposed to the risk, and if you lose 100% of your investment. But when you invest through a unit trust, you can never lose 100% of your investment because it has been spread in that portfolio of so many different companies. And even if the overall price goes down, in fact, that should be the time for you to reinvest. It will never go so that at TCG you bought Safaricom, you bought shares at so price, and then you want to withdraw and they've dropped so low that you make a total mess. By the way, one thing that you have to understand when you invest in stocks and shares is that those are long-term investments. Please don't take the risk of investing in stocks and shares as a medium-term investment or a short-term investment. When you're looking at stocks and shares, always look at 5 years and above. Why? Because in between there, all sorts of things can happen. The prices can go up and the prices can go down. But when you're in an old mutual equity fund, let me just talk about old mutual because those are the ones I know, those are the ones I've invested in, those are the ones I've dealt with. When you invest in an old mutual equity fund, that makes you an indirect shareholder of the companies that old mutual share has bought. So when they pay dividends, they pay old mutual equity fund dividends and you share. Also, don't forget that the fund managers are speculating every day. So every day prices are going down, prices are going up, stuff like that. And those fund managers watch those different prices and they're able to speculate, buy and sell, and make capital gain and make profits from selling and buying. So every 6 months, the profit is distributed by buying you more units. So this is like passive income. This is buying you more units. And in fact, when the price is low, when the distribution comes, when it's time to distribute profits, you see, for you, when the price is low, you buy more units. So when you're there for a longer time, you're able to take advantage of many reinvestments. And that is why you're told to look at a long-term outlook when investing in stock markets. Now, one more thing I want to specify: the difference between stocks and shares. Stock is the general investment. When you say I have bought so many shares, it means for a particular company. So you can say I bought 10 shares of company A. But when you say stock is the general term for shares. So you can say I invest in stock, and that means I have invested in company A 10 shares, company B 15 shares. So stock is the name of shares. Stock is the name of shares. So when you say that I own stock, you own shares in various different companies. But when you say I own shares, you own shares in one particular company. So to recap, a unit is a slice of, or rather a share of underlying investments. When you invest in an equity fund, you have become an indirect shareholder of the stocks and shares that the fund has invested in. An advantage of investing in stocks and shares through an equity fund, through, let me specifically say, Old Mutual Kenya Equity Fund, is that you have qualified fund managers. You spread the risk, you spread the returns, and the returns means, of course, what it is that you save from capital gain, from charges and taxes and licenses, and what you save from having to pay all those things. When you pay the fund manager, he pays himself, he pays agents like us. So by the way, at the end of this presentation, you'll see a transaction code. Start usually by putting your money in a money market fund. There your money is safe, your principal is safe, it will never fluctuate, it will never go up or down. So once you park your money there, you can always make a decision to switch funds whenever it suits you. By the way, these days you should not be keeping any money in a bank account. Open an Old Mutual money market fund account. At least there you'll be earning interest daily. It's easily accessible. You can get it when you want, and some of it you can keep pushing to all these investments pole as you go on. So catch up with me in my next videos as I continue to explain what unit trusts are and how they can help you.